Hey traders, welcome back. It is Wednesday, February 18th, so the market's just wrapped up recently. Let's get right into the news. So Wall Street seems to finally be finding its footing, though not without some stumbles along the way. The S&P 500 closed at 6,881 today, gaining 0.56% on the session. The Nasdaq led the way, climbing 0.78% to close at 22,753, and the Dow Jones added 129 points, settling in at 49,662. So that's 3 days of a grinding recovery after last week's tech-driven sell-off. And the big question everybody was asking today was whether the Federal Reserve's meeting minutes would throw a wrench into the momentum. The short answer, they didn't. The Fed released its minutes from the January 27th to 28th meeting this afternoon, and the language reinforced what most traders already suspected, and that is that policymakers are in no hurry to cut rates. The minutes stated that it would likely be appropriate to hold the policy rate steady for some time while the committee carefully assesses incoming data. So markets had already priced in about a 93% chance of no cut at the March meeting, and so that didn't really change much after the release. What matters more is the broader trajectory. Futures markets are still pricing in 2 to 3 cuts by year's end. So the Fed isn't slamming the door on cuts, they're just making you wait at the threshold. Now let's talk about the stock that stole the day's headlines, and not in a good way. Palo Alto networks got crushed, falling roughly 7 to 10% after reporting earnings yesterday after the bell. Here's the thing, the actual quarter was solid. So again, I sound like a broken record. Stocks having good numbers and then getting crushed the next day in trading. It's very strange. But Wall Street doesn't trade the past, it trades the future. And the future guidance was the problem here. So Palo Alto guided Q3 EPS to just 78 to 80 cents, which is well below the 92 cents analysts were expecting. The culprit? The massive $25 billion acquisition of CyberArk is creating short-term margin pressure as integration costs pile up. So this is a classic case of a great long-term strategy creating real near-term pain. So watch this ticker. And on the winner's side, Nvidia added another 1.6% after Meta Platforms confirmed it's deploying millions of Nvidia chips in its data center build-out. And Amazon popped nearly 2% after regulatory filings showed Bill Ackman's Pershing Square grew its Amazon stake by 65% in Q4, making it the fund's third largest holding. When Ackman buys more, people do notice. There was also a wildcard move in MSG Sports, which jumped around 9% on plans to spin off the New York Knicks and the Rangers into separate publicly traded companies. Markets love pure play assets, and apparently they really love the Knicks. Before we close, here's what's on your radar for the next 48 hours. Tomorrow morning, Walmart will report earnings, and this is the first since joining the $1 trillion market cap club. So that'll be a huge read on the American consumer. And then Friday, we'll get fresh inflation data that could either reinforce or complicate the Fed's patient stance. So set your alerts because the next 2 days will definitely matter. So that's it for today. Until tomorrow, stay sharp, have a good evening, and I'll see you back here tomorrow. Bye-bye, everybody.